Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and what we're going to talk about on this day, the 30th of January, 2025 a.m. Eastern Standard Time. What we're going to talk about are, of course, the pre-market futures, some headlines, an observation with regards to Ray Dalio, some hypocrisy, which is really annoying, and we're going to talk about the charts of Facebook. We'll do Microsoft. We'll do Tesla, as well as Apple. So we'll talk about those stocks this morning. But first, please hit that subscribe button. Please hit the like button. Helps me out with the YouTube algorithms. And also, members, tonight we'll be doing a members group inner circle, 6 p.m. Eastern Standard Time. Get your symbols ready. And what we'll do there is we'll go over the weekly charts of how we're poised to close out the week on a weekly basis with one trading day left to go. That'll give us an opportunity to see whether or not we want to readjust our positions. Are we happy? Do we want to add? Do we want to pull back some? Because we want to begin to set ourselves up for next week. So we're thinking on Thursday about next week. Also, we're going to go over your symbols. So come prepared with the symbols that you want me to talk about, and we'll go over those symbols, and we'll spend some time talking strategy about whatever you want. It's open mic night. So if you're not currently a member, you want to join in, 14-day free trial offer, please click anywhere on the website, and you sign up, and you get you join us. And what else? I think that's about it. Good morning. Let's get to it. Let's begin with the headlines as we wait for people to join in. And there's not much out there. I don't like to talk too much about the hype that's especially on zero hedge. I love zero hedge, but sometimes it could get really hypish, and I don't want to buy into that stuff. So let's talk about fact. And you have JP Morgan, which is slashing jobs. This is one of a number of financials out there which is slashing jobs in their consumer division, hundreds of them. So in a time of utter prosperity and a time of course, Fed bailouts behind the scenes, JP Morgan is laying off workers. Now, granted, this is a drop in the bucket in terms of their workforce, but it's job cuts nonetheless. So something going on over at JP Morgan. Now, when it comes to fund managers, I have a special place in my heart for many times, I won't say disdain. Hey, good morning, RL. No picture? No sound. So how are you hearing me then? Oh, no problems. I'm confused. Patrick, maybe you have me on mute, or RL, you can hear me? And you can see me as well? All right. Everything looks fine on my end here. I wouldn't know what else to do to fix this. Okay. All right. Thanks, RL. All right. I'm going to keep going here. All right. So Ray Dalio is the manager of the largest hedge funds in the world. In the world. Yet, and he's not, let's forget about yet. He's also woke. He's very now into the woke movement. And there's nothing worse than the capitalistic woke guy. The two do not go hand in hand. And he comes out the other day, and this is so annoying. And this is what I always complain about. These fund managers always want to be long. They have to be long, with the exception of Ray last year. I'm going to go to his returns last year. Founder of world's largest hedge fund says cash is trash as the Dow soars to records. All right, so here's Ray Dalio talking up cash at the top of a market, talking down trash at the top of a market. Wants you to get long because he's going to get long now. He's woke. In terms of being strategically woke for his business, and in terms of socially woke, he's the gem of the liberal elite. Now, let's take a look at reality. What did Ray do last year? What was his return last year? This is through December. Ray Dalio's top fund is having a rough year, and now one of Asia's biggest lenders is telling clients to pull their money. And through this, you can't make this up. His top fund, Pure Alpha, has slumped even as the stock market has soared. His fund lost 6% this year through August the 23rd. Bridgewater's top fund, Pure Alpha, fell 6%. All right, I already said that. But overall, his net return for 2019 was about 5%. And I don't know whether or not that included his fees. If he was a decent guy, he would waive those fees because he just so underperformed the market. And you have to laugh that what they're doing is that they're actually quoting this guy as if he's a god, and they're not talking about his return. So this is why you have to look at these guys and you have to say, what is their motivation? Why are we listening to Ray Dalio? He got it wrong so bad last year, and now we're supposed to look up to him as if he's God's gift to trading. Give me a break. All right, let's get to, I think we have more people on. Okay, let's get to, you're good now, Pat? All right, cool. Thanks, Pat. Thanks, RL. So let's get to the futures. I want to take a look at the dollar first because the dollar has been really strong, but it's beginning to weaken up a bit here. Now, for those that are new to swing trading today and don't know me, we aren't necessarily aggressively long of equities, not trading wise anyway. We are more positioned in a contrarian way. We're vertically bullish using gold in the miners and silver, not necessarily spot gold, but the miners as our proxy for gold and silver. And we are short the market. It's not in a big way, in a small way. So what we're looking for here is weakness in the US dollar, ideally to help our gold mining trade and our silver trade. That's why I'm starting off here. It's like our baseline. And we are coming off the highs. We are still putting in higher lows here. And this is a 4-hour chart. These will all be 4-hour charts. But what we did here is we broke the lower band of support on a 4-hour basis. Do you trade off of that? Not necessarily. But it is an observation worth noting. We broke, we pulled back, we rallied, we attempted to recapture, yet failed. So that's an indication to me that the dollar is, while strong, is beginning to weaken up here a little bit. Perhaps they'll recover. We're open-minded. We're not going to draw conclusions simply by a 4-hour chart. However, with members last night on Market Wrap, I did go over the daily chart of the US dollar, and it's not looking good. Yes, it closed up 2 sequential days. However, it flashed hollow-filled candlesticks. That's a sign of indecision. and we may see a trend reversal, at least in the short term. Again, I'm not going to be doom and gloom here. So while Ray Dalio is telling you that cash is trash, the dollar is still very strong relative to its peers. And you're seeing this new 4-hour bar, which opened up 10 minutes ago, opening up strong, no new low yet, but the bar is still young. So we'll keep an eye on it. We'll take a look at the euro. The euro is the largest counterparty currency in the basket of other currencies that the dollar trades against, with the yen being the second largest. And the euro is coming off of its lows. We are in a tight trading range. Now keep in mind that Ray Dalio's, he's going to be my redheaded stepchild today. Ray Dalio, he said cash is trash. So that gives him an out for next year when he's up at Davos with all the other elites. And they call him to the mat if the dollar continues to rise higher. And he says, they'll ask him, the dollar continue to remain strong. You said go to cash. Get out of cash. Well, he'll just say, oh, I didn't say the dollar. I meant the euro. I meant the yen. These guys irritate the heck out of me. All right, anyway, the euro is moving up higher here. No breakout yet. Nothing to trade off of. Just an observation. Let's check out the yen really quick. The yen was stronger into the back half of December and into January. Here was December, early January. We've come off. We're starting to recover here a little bit. We have broken back above support, building the right side of the cup. So these are the two currencies that you want to watch when you want to divine which way the dollar is going to go. And they're in the nascent stages of recovery here. The dollar is still strong. Yes, again, early signs of a bit of weakness there, but net, I mean, the dollar is just far more dominant over the Japanese yen and the euro at current, and that's subject to change. Let's take a look at gold. All right, so gold is up about a 0.5 percentage point. And we've been slowly but surely creeping up to that 16-13 mark. Which we saw the evening of the imminent attacks by the Iranians on the Iraqi bases, or post attack. And as it turns out, did you know that there were 50 injuries versus the 0 they said that night? And the following day, they revised that number up dramatically. So it just goes to show you we didn't want war either, which is a good thing. We don't want war. So this morning, gold is up, but it's giving you a signal that it's lethargic. I mean, as we near this resistance level, this is not exactly level, but good enough for government work. As we near this resistance level, you're seeing trepidation. And what I mean by trepidation is that on top of these candlesticks, 1 bar, 2 bar, 3 bars, 4 bars, you have shadows, wicks, topping tails as I call them. And that's just a sign that you have some either profit takers or people that bought back here. They just want their money back. They're getting made whole. but we are nearing stiff resistance. And if we get a breakout above, let's call it, let's just use the highs of this bar here. And that high was 1588 spot 4. Let's say 1589. We're going a lot higher. On gold. So it's looking good, building the right side of a base. Now we are long of the gold miners in a very big way. And we have been selling covered calls against the position. And we did sell some covered calls earlier in the week on the NUGT trade. And we hit in the pre-market this morning already 33. And we have backed off. And what we're doing is we are retesting the breakout point. We broke out here, pulled back, did a retest this morning already, and we're trying to push higher. Now, we have the 33.50 strike price. We'll be talking about whether or not we're going to let those options get called away from us, or will we roll out of the position. So we'll develop a strategy. I went over it last night with members on Market Wrap. The probabilities of us getting called out are still favorable to us at around 70% chance of the calls trading out of the money. So that's still favorable to us. So we're going to give a little bit of room here to see what NUGT does today, but we may be forced to roll out of that position and into next week. So members, more to come on that trade. But net this morning, we're looking pretty good. So we will look to add at some point in time in the future here. But a good rebound on the week for NUGT. Let's go take a look at Bitcoin really quick. Brexit completes tomorrow. That's interesting. Not much in terms of volatility in gold with this round of Brexit. Because remember that first time when they went for the Brexit vote, you saw gold and the dollar just simply surge higher. So back to Bitcoin. Bitcoin is consolidating here. And it's getting a lot of bad press in terms of its ability to continue higher here. Guys like Peter Schiff are out there, and I like Peter I love Peter Schiff. He's one of my favorite economists that there is. But I think that as a store of value, while I agree with his very fundamental view of Bitcoin, I don't think that he's considering how much sentiment matters. You know, when people believe that something has a store of value and you have a herd of people, especially institutional money now, that is just piling into Bitcoin, the masses are creating a market, and that sentiment that there is value there, that creates value in and of itself. And he may be right on a very, very fundamental basis that there is no store of value here. But if you have money flows that are circulating into it, making the assumption that there is a store of value because there are a lot of other people that believe there's a store of value, then there's a store of value. Until, of course, confidence erodes. And you're not seeing that right now. You're seeing Bitcoin on a macro base. Let's go to a weekly chart. Wrong chart. You're seeing it build the right side of a base. And I think that we can head significantly higher here based on the technicals. I'm not that smart. I can't tell you what's going to be the winner in the crypto arena. I have no idea. My major concern about cryptocurrencies is that, the competition for Bitcoin is the federal government, is the Federal Reserve. They don't want a competitor to the U.S. dollar. So if there's one major concern I have with Bitcoin, it's that is at some point in time, as the federal government feels competition, they're gonna ramp up the heat, unless of course there is some sort of a compromise. And when that compromise is reached, if that compromise is reached, well then, whoever the winner is in the crypto arena, uh, man, you got to jump on board. And it could be after some sort of a crisis occurs, a debt crisis, and you have the U.S. dollar that is not the fiat currency of the world's reserve currency. What does that mean? What do you mean, Patrick? Can you be a little bit more specific? Let's take a look at the bond market. Bonds continue on a tear here. We were down at one point, this 4 hour bar, and we rallied back to close positive. This new 4 hour bar, we're slightly up, but it looks like we're going to pump higher here. Very nice. Oh, Brexit. I'll let RL elaborate on that. RL, is it official that tomorrow that they're out of the EU, or what's the deal there? Is this a parliamentary vote of some sort, and they're making it official on the UK side? Yeah, got you, Pat. Yep, got you. Um, Final vote. Got you. Okay, thanks, RL. Let's take a look at silver, of which we are long. Silver has bounced back nicely. We were in this trading range, and we broke down below the lower band of support, but we have since rallied back. And what we're doing here is we're approaching like an inverse tripwire. Like, here's my old tripwire. You can see how it behaved very, very well. Failed to rally above it, broke down. Uh, then as we broke support, this tripwire became a new support level, and we rallied off of it. Now what we have is the inverse. We have a tripwire that is acting as resistance. So let's change this up here. And there you have it. So rather than this being our primary upper band of resistance on silver, I'm looking at this at the 17.8 level. We're looking for a close above that mark. If we close above it, consolidate, then that'll put into sight the upper band of resistance here, the primary, at around a little over 18. And on a close above that mark, we'll entertain adding more here, but this has been very, very fluid. So I would rather create a new support level or resistance level that'll be more definitive to add above, because we've traded above this resistance level once, twice, 3 times, and failed all 3 times. So I would rather create a higher level threshold at which to add more here. And that would be on a close above the 2 major peaks of this trading range, and then look to add more. And honestly, just forget about this resistance level, because you can't buy on a close above it. Reason being, is that you'll have resistance immediately above. So this is no longer the primary. This is our new primary upper band of resistance for silver. So it's not time to buy silver yet. Early stages of recovery here. Taking a look at oil. Energy yesterday, I mean, bad. Very, very bad. I would be hard pressed to make a case for a bullish case for energy. And this morning, oil is taking it on the chin again. We're closing in on the lows of the week. And the reason why this concerns me is that, again, I know I repeat this every day, but we're long of gold, we're long of silver. So geopolitical events have a major influence on our positions, a major influence. So we need to be aware of what's going on around the world. What are our concerns? What are our vertical indicators that we may have a problem on the horizon that may benefit or hurt our positions? And one of them is that it'll actually help our position, is that with oil pulling back, we're concerned about saber rattling over in the Middle East. Because why? I know I say this over and over again, but it's worth repeating. It's an election year. And the people that work in the fracking sector in the United States are voters. They're Trump voters. And you don't want to see layoffs over in the fracking patch. So in order to keep the price of oil up, you'll see saber rattling over in the Middle East. As sure as God made green little apples. And we now have over 20,000 servicemen which have been moved over there. We've already moved bombers over there, and we're primed. We're primed to go. So beware of a break in oil, because I think at some point in time we start seeing a new lower lows in oil. It can't be just guys like me that are out there understanding what's going on. There'll be people out there that are saying, okay, a precipitous drop in the price of oil means a problem over in the Middle East, and you probably see an inverse correlation between oil and gold. So keep an eye on this should we happen to break to new lower lows. Not good. And I want to take a look at the XLE in the pre-market, because that was just absolutely horrible yesterday. And we are at a new daily low, no shock. But here is an interesting observation, and through the eyes of a contrarian, okay? Contrarians need love too, right? So here is why I love this job. So while we're breaking down to new lower lows on energy, what we're seeing here is a bit of a positive divergence on RSI. Look at how low we got on RSI on a 4-hour basis. It was sitting at an 11 handle. On the XLE. So what we're getting here is a higher low while we are breaking down to new lower lows on price. So we'll be keeping an eye on the XLE as it becomes more and more oversold on a daily basis. We'll keep an eye on the 4-hour chart. If we continue to see health on the 4-hour chart, the RSI on the 4-hour chart, meaning we're not validating the new lower lows on price, and we're continuing to trend higher here on RSI, we'll watch for an indicator intraday, a bullish key reversal bar on price. You need that price confirmation that we're putting in a low. You can't just trade off of RSI, and perhaps we'll sell puts, and that's a bullish play, not a bearish play. When we sell premium, when we sell puts, we are bullish on the underlying issue. So if we sell a put on the XLE, or if we want to use a leveraged ETF, I think it's DIG. I'm not sure whether or not they trade options on DIG. I haven't traded them before, at least not in the past couple of years. And we'll look to sell puts on that position. So that'll be the way that we play the energy sector, looking for a rally, and hopefully those options expire worthless. And if we do put on that trade, it has to be that if they're assigned to us, meaning they close out the week or the month in the money, we have to be willing to accept those shares. So when we're looking at the chart, we have to say, okay, if they're assigned to us, I'm okay with that, right? I'm rationalizing it. I'm okay. So that's why we're going to put on that trade. So we're going to be looking at the charts as if we're looking to buy the shares of either DIG or the XLE, whatever the ETF will be. But it's definitely going to be an ETF. It's not going to be an individual stock. Too much headline risk, especially during earnings season. Yeah, we're going to go to UGAZ and Nat Gas in a second, Pat. Thanks for bringing it up. I would have forgotten. I was looking at Nat Gas earlier. What a mess. Unfortunately, UGAZ doesn't trade. Good. Thanks, Pat. So there are options on DIG. UGAZ, there are no options, or else I'd be looking at that. We can look at the GASL, that's GASL, and they do have options. We'll take a look at that chart as well. So a lot to go over here. So let's go to, I promised to go over the charts of, I wrote them down earlier. I misplaced the paper, but I remember them. Let's go over Microsoft, blowout numbers, cloud business, and Fuego. And I'll tell you, when I was looking at the chart last night, we were talking about it with members on Market Wrap. We were very overbought. I'll tell you, we're looking pretty good here this morning. Would I chase these shares? No, it's not my style. This is a little bit sloppy, but I think you catch my drift here. We're drawing a line of resistance. We are overbought on RSI a little bit, but I'm confident that they're probably going to keep a bid under Microsoft this morning. I didn't go over the stock market futures. I want to take a look at how they're opening up. Let's just go over the S&Ps. Not looking good. Not looking good at all. So a lot of pressure here this morning. Earnings from last night are not helping at all. And we're beginning to weaken up yet again, this new 4-hour bar. Okay. So the E-minis under a lot of pressure here this morning. The sloppy chart. So we have our lower highs. The question is, do we get new lower lows? If we get those new lower lows on the heels of Microsoft's numbers and the heels of Tesla's numbers, I mean, granted, Tesla's not a market mover, but it is a sentiment mover, right? If you see big numbers out of Tesla, which is high profile, and you see a 650 handle on their stock price, that should be getting people excited about the market, and it's not. So S&P is looking very weak this morning. So really, folks, I mean, if you're thinking about buying Microsoft this morning, I think you're going to get a better opportunity at some point in time in the future. Because while it might outperform the market today, it's improbable that it's going to continue to outperform the market, meaning rallying while the market is pulling back here. Yeah, we'll go to Facebook in 1 second because that's just a nightmare. IBM lost all of its earning pop. Yeah, that's a bad sign. And I think that we may get the same for these high beta names. Now, if there's one I'm looking to short, and it's not because I don't like the company. I do like the company. I'm a huge fan of Elon Musk. Huge fan. I think he's a modern day Thomas Edison. And it looks as though they're keeping a bid under Tesla this morning. And I would look to short this should they push it up higher above that 660 mark. But great numbers out of Tesla. Can I buy it here? No. Not with the market weakening up the way it is. At some point in time, the euphoria will leave these shares and they will begin to pull back and trade along with the market. Let's take a look at Facebook. Now, the obvious question is, me being a contrarian, would I sell puts or buy shares of Facebook right now? In all probability, no. Not until we hit a historic support level that I'm confident will hold, and that we've seen some sort of stabilization in the overall markets. And right now, I think that we're in the beginning stages of seeing this market begin to roll over. And where the bottom is for Facebook, not quite sure yet. We'll need to do a little bit more of a deep dive. In fact, we'll go over that with members tonight on the Members in a Circle, and we go over the weekly charts of the major averages and how we're poised to close out the week as we proceed into Friday and into the new week. We'll determine where on a weekly basis we have historical support where we may want to look to get long of Facebook. But right now, while we're consolidating here, and I won't deny this, while we're consolidating here, you have some bottoming tails. We may pop up higher here, despite the fact that the market's weak, because Facebook is so underperforming the overall market. So, sure, dead cat bounce, certainly in the cards here. Will it last? Probably not. That's what dead cat bounces are all about. They're ruthless, they're sharp, they're unsustainable. So me personally, we may break out here. I would not be a buyer because ultimately I think that we are going to break this lower band of support. So I would avoid Facebook as this market weakens up. All right, so I did Facebook, Microsoft, Tesla. Apple is another one that we're looking to short, not for the daily chart, not for the 4-hour chart, but for the weekly chart, which at current has RSI at over 90. And we have, I have to be honest with you, I would love to say we have to go in there short the shares hand over fist today. Can't. On a weekly basis, we have a bullish engulfing of the prior week's move with RSI above 90. I mean, you just can't short it yet. We don't see the indicators on a short-term basis that would tell you it's okay to go shorting Apple quite yet. With the exception of one, and that is this. We do have actually two. We do have lower highs on price and we are putting in lower highs on having some issues here on RSI, and we are putting in lower lows as well on RSI. So were I a bull in Apple, I would be concerned. I'd be certainly raising my stops were I a trader of Apple, not an investor. Even if I was an investor, I'm going to be looking to book profits here. RSI on a weekly basis of 90, I mean, that doesn't happen often. And it's probably not going to happen again for quite some time. So I'd be looking to book my profits on Apple. So some early chinks in the armor on Apple. Would I be jumping into the short side with both feet? Not yet. Maybe nibbling to the short side. But again, price trumps all, right? So and we have 2 trading days left to go. We have a weekly chart of Apple that so far this week through Wednesday's close is a bullish engulfing of the prior week's move. Very bullish stuff. So while we have RSI very, very overbought, you can't deny the price. Now, if we pull back off the highs of the week and we that bullish engulfing bar begins to evaporate and we see a large wick on top of that candlestick, then it becomes more interesting as a short. But we'll let the market tell us which way Apple's going to go, and we'll revisit the chart of a weekly basis tonight with members, and we'll formulate a game plan if one is warranted. Patrick, we'll bring up IBM for you. Oh, yeah. And you can see here, and this is something to keep in mind, that IBM had a very good report, a lot of euphoria, in a lot of minds of traders. They see these earnings reports, the talking heads come on CNBC, they get upgraded, yada, 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 and in their minds, all they're thinking is, I have everything on my side. It's only going to go higher. Fast forward a couple of days, and look what happens. Sentiment begins to dry up. There's no follow through. Oops, wrong. And now what we're doing is we're breaking down to lower highs, no lower lows yet. Again, this is a crude support level I'm drawing here, but you get the picture. So if we begin to see a break below the support level, which marks the lows of the 21st, then IBM has some problems. Until that time, we're in a trading range. And with that, folks, I'm going to call it a day. Members, I will talk to you tonight on the Members Inner Circle, 6 p.m. Eastern Standard Time. If you could hit that like button, I'd really appreciate it. Everybody have a profitable trading day, and I'll talk to you soon. Be well.